my name is James Nicholson and welcome to my YouTube channel. In this video, I want to firstly thank everybody. This is the 1000th video on this channel. And in this video, we're going to talk about lenders that have cut rates. We've got another major lender that has cut rates. Well, in fact, they're cutting them tomorrow. So we're going to talk about that. We're going to talk about the average mortgage rates as well. They've gone up, unfortunately. Where do they sit at the moment? And what are banks expecting to happen in the next quarter? So, as I said, this is the 1000th video on the channel. So thank you to everyone that's watching. We've nearly had the channel 3 years now. And I really appreciate everybody that has subscribed. Here's a little hint. If you haven't subscribed already, do subscribe and hit that bell notification. And let's get some more views on this content by smashing like, tickling like. A celebratory like hit would be great. But really, I do appreciate everyone that watches and all of your comments on the channel. So mortgage rates have been a bit unpredictable as of late. In fact, the last month or so, they've been rising. But there is some lenders that are trying to be competitive. And the reason for that is there's expected to be a very good first quarter in the property market. Most of that is down to the fact that stamp duty is going to increase or go back to its normal rate on April the 1st. On April the 1st, 2025, stamp duty will be increasing. And for first-time buyers, I did a video last week, go back and check that, where the first-time buyers are going to get hit the hardest. There's some categories there, some price levels where it's a massive jump, as much as £7,000-8,000 extra that you've got to find on top of your deposit. So lenders are expecting a surge in purchases, in transaction volume in the first quarter, and they want to take advantage of that, even though lending rates that they have got have actually increased recently. They've had a bit of a drop the other day, but mostly they have been going up due to uncertainty with the budget and how that's going to play out. And we've obviously got the election and a new president starting in January in 2025. So the markets want to see how that plays out as well. So who's cut rates? Well, this is Barclays are cutting rates. It's not today, it's tomorrow. So it's the 10th these rates will be going live. But it's a good start. And so, as I've said in recent videos, I don't think you're going to get many rate cuts prior to Christmas. We've got NatWest that cut the end of last week. They did a fairly decent cut, 0.39%. So nearly a third of a percentage point there, which is pretty good. And Barclays are cutting here. But I don't expect a flurry of cuts prior to Christmas, just because not many people actually do applications or remortgages at this time of year, because solicitors, you've got about a week or so until they have a 2-week break, and everything just really starts to slow down. So how much are Barclays cutting? First off, it's the 10th of December this cut goes into place, and they are cutting across the board around 0.14% down, which is not bad, but it's not as big as some of the cuts that we did have in the summer. This just brings back to where they were a few months ago. You see, they had really good competitive rates in the summer, below 4% in fact, but then they did creep them up a little bit a few times. And so this is starting to bring them back down. So what are their best deals that they've got that you can go out and check? Well, they're going to have a 5-year deal. And that 5-year deal is going to be 4.11%. But you do need a 40% deposit or 40% equity in the property. So that's going to be their market leading deal that they've got. They have a slightly more expensive deal for those with smaller deposits, 5-year as well. It's going to be at 4.22% with a 25% deposit. So that is not bad. It's definitely not as good as the summer, but it's definitely moving in the right direction. Overall, though, mortgage rates have gone up in the last month. So let's have a quick look at what the average 2-year is now and the average 5-year deal. So this is across all lenders. The 2-year deal average is now 5.52%. That is up just in a month, 0.13% up in a month. So average deals are definitely creeping up. So some lenders are behind the scenes. They're not big lenders necessarily, are pushing prices up. And as we said, there's only a couple that are reducing rates. Let's look at the 5-year average now. So the 5-year average is 5.28%. And that has gone up even more, which is 0.19% on average, the increase. Now, what can we notice from these two rates here is 5-year deals are cheaper. That indicates that the market is expecting interest rates to drop. Bank of England, the expectation was that the Bank of England, it was all doom and gloom after the budget. The markets predicted and priced in the Bank of England would cut rates twice in 2025. But interestingly, Andrew Bailey has been doing speeches and seminars and stuff like that over the last few weeks. And last week he said he wants to correct the market so they can price this in. He said we will be likely to cut rates 4 times in 2025. So that's good news. So he's saying we're going to cut double what the markets were expecting, and hopefully it will be even more than that. So if you have a mortgage that does expire any time in the next 6 months, here's what you can do. You can go to your lender and you can start and look to fix a rate. So let's just say you had Barclays. You could go to Barclays and you could agree the 4.11 deal, 4.11% deal. And let's just say you start that deal in March, but just before you start that deal, rates plummet. Because you haven't started that deal, you're locked in at that 4.11, you can swap onto that better rate. Let's say the alternative happens though. You fix that 4.11, but you haven't started because it doesn't start until March, but rates now go through the roof because inflation starts to rise again. The Bank of England, the Federal Reserve, all these central banks start to increase rates again. You've secured the better rate. So you've given yourself that worst case scenario. That is important. And I know hundreds of people that have watched this channel have done that because you've commented. And even more people have probably done it and not commented. So if you have done that, let me know. One thing I do want to say, which a few of you have commented on, is the fact that some lenders now are reducing that period from 6 months out until 90 days odd. And that's possible with some lenders. If you've got a lender yourself and they've reduced it to 60 or 90 days, do comment below and let us know who they are. Be good to know which lenders are doing that. But it's not all lenders, right? It's not all lenders. And also, you can go to a broker and get a deal with a totally different lender that you're not currently with. I have one of those on the table right now. I have a deal for a property that I've got in Doncaster, and I've got the offer at the moment. I've got the offer letter that is valid for, I think 3 months that's valid for. So I've got a decision, but I don't need to move that very quickly because I'm potentially seeing if the market does drop a little bit in January and I can get a better rate on that. So that does work. So do let me know in the comments if your lender has cut the period. But in principle, most lenders would allow you to fix your new rate 6 months ahead of time, and that's the smart thing to do. So Barclays, in summary, have dropped. NatWest have dropped. Bank of England are saying they're going to cut 4 times, which is all good news. And hopefully we'll get some more of that in next year. So do comment below with any questions, observations or opinions. Do smash like. Do check out all the other content on my channel, including this video right here.